Good evening and welcome to the Financial Report. Statistics show that in the first 3 quarters of 2025, the average wage earner from the Mandatory Provident Fund, or MPF, earned over 43,000 Hong Kong dollars, more than double the full-year return of last year. Nasvi Kareem with more.
Major global stock markets have hit new highs and the atmosphere is buoyant. The MPF contributions of the working class have also increased, according to statistics from an MPF consultancy. The MPF investment return in September was 3.6%, which means that every working person's MPF account earned nearly 11,000 Hong Kong dollars. In the first 3 quarters, the average per capita return exceeded $43,000, the highest return in the past 8 years. This is more than double the average return per person for the whole year of 2024. All fund categories recorded positive returns in September, with equity funds performing the best, up more than 0.5% for the month and 23% for the first 3 quarters. Among them, Greater China equity funds performed the best, rising 38% in the first 3 quarters, followed by Hong Kong equity funds tracking the index, which rose 37%, mainly because of the strong performances of mainland and Hong Kong stocks in the 3rd quarter. The return in Europe is 18%, Japan is also up 16%. The performance of stocks in the United States is relatively lower. The agency pointed out that looking ahead to the 4th quarter, Greater China equity markets are expected to perform positively and continue to drive the Mandatory Provident Fund. Christopher Lau, GUM Chief Investment Officer, said the A-share market has become much more active, especially with global funds beginning to flow into the mainland and Hong Kong stocks. And this momentum is being maintained. He added that the central government appears to be continuing its liquidity easing measures. He expects the MPF's full-year performance to reach 18% or even 20%. The average return per person could reach $48,000 or higher. The agency pointed out that members with lower risk appetite can continue to allocate conservative funds, but need to pay attention to the decline in the interbank interest rates, which may affect future returns. Kareem, TVB News.
Hong Kong shares paired earlier losses in the afternoon session, with the Hang Seng Index swinging from an intraday low of 440 points to close just 128 points at 26,829. The Hang Seng TechH meanwhile rebounded after slipping below 6,500, closing the day at 6,514 points. Hong Kong is increasingly recognized as an ideal destination for global investors because of a safe and stable investment environment, said an official from Invest Hong Kong. Jason Fong, global head of the family office at Invest Hong Kong, said the city's business environment is supported by one country, two systems. He added that China's growth in artificial intelligence has helped boost Hong Kong's appeal.
Investors, they are always chasing after asset safety. Hong Kong practice common law under the one country, two system. In Hong Kong, our tax regime is simple, transparent, and with certainty. For any investors, this is the ideal place to place their investment. We understand that the AI development, whether it's the investors, whether it's the user, whether it's the practitioners within the industry, we're all looking at that. Our nation, China, has been doing so well in many areas. We're actually leading in the global turf. Whether new money, old money, any type of money, they can't neglect, that huge part of their portfolio.
And that's the Financial Report. Thank you for watching.